What's up, Mavericks? Is your business struggling to get approved by payment processors, or have you been labeled as high risk? Today, Merchant Maverick is breaking down everything you need to know about high risk businesses, from what makes a business high risk to how it impacts your payment processing options. Stick around because we'll also cover ways to improve your situation or find the best processors for high risk businesses. So what exactly makes a business high risk? In simple terms, a high-risk business is one that payment processors see as more likely to experience issues such as chargebacks, fraud, or regulatory challenges. As a result, these businesses often face more scrutiny when applying for merchant accounts and may be charged higher fees to process payments. Several industries are typically classified as high risk, including adult entertainment, cannabis, gambling, and firearms. These industries may have a reputation for higher levels of chargebacks or legal challenges, but that doesn't mean every business in these categories is problematic. Still, the risk level associated with these industries makes payment processors cautious. There are a few key factors payment processors use to determine whether a business is high risk. Number one, high chargeback or fraud rates. If your business experiences frequent chargebacks or fraud, payment processors will consider you a high-risk business. This is one of the most common reasons for the label of high risk. Number two, low personal credit. If you as a business owner have a low personal credit score, this could influence whether your business is categorized as high risk. Three, international operations. If you're running a business with overseas headquarters or accepting payments in foreign currencies, it could definitely raise flags with payment processors, especially in the US. Four, industry with legal risks. If your business involves selling regulated products like drug paraphernalia or firearms, processors will view this as a potential risk due to possible legal challenges. Five, high transaction volumes or large transactions. Businesses that process high dollar transactions or have a large monthly processing volume are also at risk of chargebacks, making them more likely to be labeled high risk. Six, non-traditional business models. If your business operates using a non-traditional structure like multi-level marketing or timeshare sales, it's more likely to be categorized as high risk. Seven, financially unreliable customer base. Businesses in industries such as debt collection or loan modification may be flagged because their customers are often in financially unstable situations. If your business is considered high risk, it can have significant consequences, especially when it comes to payment processing, business insurance, and loans. Here's how it could affect your operations. Higher fees. High-risk payment processors typically charge higher processing and monthly fees. These extra costs can eat into your profit margins. Some processors require high-risk businesses to maintain a rolling reserve, which is a portion of your sales held back for a period before being paid out. This reduces your immediate cash flow, which can be a challenge to smaller businesses that need that capital. Limited options. Not all payment processors accept high-risk businesses, so your options are often limited to processors that specialize in high-risk industries, and those processors often come with higher costs. If your business has been labeled as high risk, there are steps you can take to improve your situation. Number one, switch processors. Some payment processors have more lenient criteria than others. Shopping around for a new provider might allow you to find one that doesn't consider your business high risk. If you'd like to see a list of some of our best high-risk processors, click the link in the description below. Number two, dispute your match list placement. If your business has been placed on the match list, you may be able to dispute it if you believe you were added in error. If not, you'll have to wait 5 years for it to be removed on its own. Number three, prioritize PCI compliance. Failure to comply with PCI standards can increase your chances of landing on the match list. Ensure that your systems are PCI compliant to reduce that risk. Four, reduce chargebacks. Minimizing chargebacks can help you avoid the high-risk label. A clear return policy and effective customer communication can go a long way in preventing those chargebacks. Businesses, especially those in high-risk industries, escaping the high-risk label might not be possible. In that case, you'll want to make sure you're partnering with a reliable high-risk payment processor that offers reasonable rates and doesn't lock you into a predatory contract. While you will likely pay higher fees than low-risk businesses, it's important to avoid long-term contracts, unjustifiable fees, and poor customer service. Being a high-risk business doesn't have to be a major setback, but it does require careful planning and the right payment processor to ensure you're not overpaying or getting locked into a bad deal. Again, if you need help finding a processor for your high-risk business, check out Merchant Maverick's top picks for the best high-risk payment processors, linked in our description below. Thanks for tuning in, Mavericks. Be sure to like and subscribe for more expert advice from Merchant Maverick, and we'll see you next time.